Our dear Mavi community, good evening, good afternoon, and good morning to all around the globe. And today it's Wednesday when we will speak about the FinUp, where we will speak about the trading strategies, and where we will speak about the current crypto market situation. Ladies and gentlemen, today Mustafa Kalik from Zignali unfortunately cannot join this call because he's on a flight to Asia. But that's why we have on today's call, ladies and gentlemen, Mr. Steve Jobs of Trading, Mr. Sven Miller. Sven, once again, thank you very much for joining this call. And please share with us what is happening in the crypto market. We are in the bear market. We need to consolidate what is happening. Sven, the virtual stage is yours.
Hey, thank you very much. Okay, let's start with the market first of all. Give me a second. Need to change my screen. So.
We don't see it yet. So the moment that you click the share.
Yeah, I see it, just not on the right screen. No problem. Let's make all Belgium. So you can see my screen. So okay, let's go.
We see your screen, correct?
Okay, first of all, let's look at SPX, so 500 biggest American companies. And if you're looking here on a 4 hours, so there's a chance that we go higher a bit, but it's also a good chance that already the top is in. So, and we will have something like this. Economy is very fragile, and probably by January they will start with very big rate cuts. Now you will think big rate cuts is good because everyone in crypto is screaming, "Oh, the Fed will cut the rates, and then crypto will go parabolic." But that's actually a misconception. So they think as more money there will be, as more inflation will be, and then the crypto will rise. And in general, that's correct. But if the Fed is cutting the rate aggressively, this means that the economy is in danger and we will go into a recession. When we will go into a recession, this means money go out from risky assets to safe haven, or just to go to like US dollar, and this will happen then with stocks, and this will happen with Bitcoin. So if people starting to sell their stocks, usually also crypto is going down. So this is a bit the problem what we might have. And nevertheless, if we look into Bitcoin,
Slim, if I may just ask here, sorry, before we jump into the Bitcoin, I would like to understand if this correction comes or if the top is already reached. Based on your knowledge, how long might it take in order to hit the bottom, or how do you see the structure? If the top is already in, how long this falling can come into the global market, either stock or crypto?
So stock will be maybe more fast, but a recession can be like for like a years. So we have quite some risk in the market. So you can see like the whole AI chip race and so on. It's a good technology, it looks good from revenue and so on, but it's kind of a bubble what we have, right? And there are many more risks in the market, in the housing market. It's the same situation like before the bubble burst, and we have the problem that inflation is ticking up, but we need to lower the rates. So overall, it's quite complicated market, and world economy is also shifting from integrated world economy to like more like a localized economy where there will be less in and export. So factories going back to the US, going back to the Europe. So there are so many problems. So it's very difficult to say when the bottom will be in. But most likely, there's a very good chance that we already topped in October for Bitcoin, for at least for this circle. It always can something change in the market, like US government is buying a 1 million Bitcoin. But if you look just on the technical analysis with the data which we have today, it's not look so good. What's going to happen if in the short term is that probably we will bounce and maybe we go to like around here, let's say this area. right? We go to this area kind of, maybe a bit lower, maybe a bit higher. And then we will have a bigger correction, and this correction will go over some time, but will go to 70, maybe 70-ish thousand. And if my predictions are right, then we will go even much deeper, and it's a good chance that we'll see like levels of 20,000 and so on in Bitcoin once again. But it really, there's a lot of dependencies. Always things can change. Macro of the market can change. But if you look in the current data and in the current information we have, this is a likely scenario. So I don't think that Bitcoin is that we will have a new top. But if we break this level of 25, 26 significantly, this would be good news. Then we would be not in a bear market. But right now it's very bad. You see also the big ones are selling. They're trying to manipulate the market a bit to lead the retail investors in a way to that they're going to exit. That they get some, exit liquidity. So we pump up again, and all retail start buying here, and then they're trying to sell into these buyers, and then they dump again, they pump it up, they dump it again. But like more and more sell pressure is coming, so it doesn't look so good for crypto at the moment. Sorry, I need to switch my screen. So before we go into our trading, I want to go live into our position as well. I have some small presentation. Wait, anyway, share my screen. So you can see my screen? Yeah, perfect.
Yes.
Yes. Okay. So in the last weeks, we had like a lot of teaching. So a long story short, if you want to learn all what we discussed, I guess there are some records. But there have been some issues which we overcome, and some optimization in the algorithm. And this data you can see is now the latest version of what we trade. So if it's the orange curve, and there's like different scenarios. So we had like a green scenario after we overcome the issues, then we improved the risk one more time, then we came to the blue curve, and now we at the orange curve. So we have like I think a very good setup in terms of trading now. Even like whatever happens, like we prepared. Even if Binance one more time is going to fuck us, we are prepared because we double and triple implemented the APIs. So if one technology not works, we go to the other one. If they block us, we have like auto closing. So it's like we're adding more orders. So we are very good prepared. But this is kind of this is what you have to expect. But I will go a bit more in detail on the volatility of those equity curves, because that is what is actually mostly annoying for the investor. But if you look into this data, so you can see we would be this year by almost 100% already. It's the years before also plus, and this is for delta max, so that's like conservative settings. If you want to look into Binance Core, we have like 2x of these values. So good news. Oh wait, I came too far. So we are in profit for November so far. So after we had like a lot of changes and improvements, and we had like a very wild and annoying October where they tried to fuck the whole market, but fortunately we survived. Anyway, we took a little bit of a hit. In November we are in profit. So, and what we expect in November is kind of 6% for Delta Max, and Binance Core around 12%. This is what we kind of estimate in the current market situation. So where we are with Binance Core, so we had like, this is just for November, so we went kind of 8% up, and then we started to lose in the last week a bit again. But this is just the green chart is just the closed positions. We have also unrealized profits, so positions were still open, which are plus another 1.38%. I will explain to this decline why it's happening in a bit. It's just like the picture. So it's for therefore that we have like not even half of the months over. It's quite good that we are around like a 5% profit, a bit more than 5% profit. And if we get like some more normal moves, we will go easy to the target of 12%, what we're going to expect. And we already had been in with 8% plus, so it's like going in a good direction. and also it's outstanding result if you look into the market. So then with Delta Max, we are was on the top around 4.5%. Now we are a bit around 2% in profit for this month. Another 0.7% is in unrealized profit, so positions which are not closed yet. So we actually the numbers higher. But yeah, we had in the last couple of days a bit of a decline, but this I will come to that in a moment. So here's an overview of the weekly performance. And you can see, so usually if you look into strategy, you look into the monthly performance, and then you see oh, this has a 10% profit. But then when you have during a week, a minus 3% or so, in the last days, it's quite concerning. But if you can see here, you see every week is one bar in the chart, and you see, hey, it's quite common that you have 1 or 2 or 3 weeks even with a loss, and usually the profits are way higher, the profitable weeks. So each week the profitable is way higher than the losing week. But you can come into a situation where you have 1, 2, 3 weeks with a loss, and then you have 1 week with a huge profit, 1 week with a loss. Sometimes, of course, if you're lucky, we have a couple of weeks with a profit, but it's a bit what it shows is a bit the volatility, right? So always when we're trading, we have kind of a loss, and the loss is called the drawdown, right? So if we're looking a bit into the drawdown statistics of our strategies, so here again, the same different optimized curve from what we're trading, but you see that we're hitting quite often 5% drawdown, even 7 to 8 times per year, and even 8% drawdowns to 3 to 4 times a year in this on conservative settings. This is, of course, a topic on which you're working, but I wanted that you understand that drawdown is not something negative, right? It's more you need to zoom out, but what is the drawdown actually? So the drawdown is basically the opportunity cost for generating profits. In the portfolio which we're trading, each strategy is opening trades with a calculated risk. This means when the trade goes wrong, we lose 0.1% of the overall portfolio. And some strategies, they have a win rate of 40%. So this means they most of the time lose, but when they win, they make a huge profit. And of course, if you have a 60% win rate, it can be that you have 2-3 weeks of losing time. But this doesn't mean that we're losing money. It's just the opportunity cost. And you can kind of, if you're going to let's say it's a bad example, but if you're going to gambling, right? Every round you play on a slot machine, yes, let's say cost you $1, and sometimes you hit the jackpot, right? Of course, if you play slot machines over a long period of time, you're going to lose. But we have kind of statistics where we say, hey, we can like in a blackjack, we're counting the numbers, we make statistics and so on to find the spots where we win. But still, most of the time we're losing, and but this is just the cost we have to spend for making the profit. So statistically, what we do is profitable, and the drawdowns is just represents the cost of capturing the long-term gains. So the equity curve is kind of a bit volatile, but this is the most the thing of what we're working the most to reduce the volatility of the equity curve, right? So this means, but the problem is, if we want to reduce the drawdowns, we also must make it in a way without losing profits. So as I said already in the previous calls, we have one thing on the test accounts running, which are showing good results, which is kind of counterintuitive of what we do with our strategies, and which we can add without increasing the risk, and with that decreasing the drawdowns. But we cannot deploy it before it's completely finished with testing. But already, as you can see in the previous slide, we had quite of improvements from week by week. So we improved the statistics from green to up to yellow, and now it's our task to make it a bit more flat, that we have less over drawdowns. But the drawdowns we just reduce for the comfortability of the investor. So it's not so much needed from a trading perspective. It's just to not have that much pain to see, oh, now we have plus 10% and now we have minus 5, because to watch that it's quite annoying. So this is so much about the trading strategies, and I wanna to the end of the call look a bit in our trading strategy, in our trading, what we actually do. So you see now here we have a Binance open, and here's actually trading. It's the same trading, the same strategies which are automated executed. So I don't do here anything manually, but it's the same what we do with Delta Max. So what you can see here on the site, you see the account has 2.1 million US dollar. The position value is 3.5, so we have like a leverage of 1.6.5, and so have a very healthy ratio. We're not taking like a huge leverage overall, even though the position can have like a leverage based on the risk we're going to invest, but just so that you have the overall statistics. And if I talk about unrealized profits, so you see we have a balance of USDT, for example, so like this 2.1 million is like USDT, USDC, and BNB for the reducing the fees. But you see like we have like 78,000 of unrealized profits. So of profits which are not yet closed and not yet in the statistics. And now you see here in the middle, you see like different kind of positions we have open. So first, if it's red, it's a short. If it's blue, it's a long. And you see we're doing partly like shorts and long at the same time. And you see at the end, what is most important is the P&L and return of investment. So you see like this position is minus $1,000. And what's going to happen now with this position? If so, this position is a short, so price is now going up. This means the loss is increasing as much the price going up. But like in these settings, there's a limit in the loss we take. So for example, if we're hitting a $5,000 loss, this position gets closed automatically, so that we never come to the situation that one position where something goes wrong is fucking up the whole account. And this is actually the issue most of the traders are doing. So we see like the Ethereum position is not yet in profit, so we're doing a short and hope to catch that. Of course, when we're going into position, it's important that we're doing kind of trend following. So we don't want to, with the current strategies, we don't want to catch such small movements. We want to catch such in a best 4 days move which goes in a certain direction. Unfortunately, you see like we are kind of like flat. Now we had some kind of drop, and now we are flat again, and inside the flat we going up and down. So this is not so good for us, because it's like not a trending market. But this is exactly the same what you saw on the presentation, right? So market is not always trending. So it's like here you see some weeks where the market is trending, we make a huge profit. When there's a huge spike, we make a huge profit. When there's a long trending market, we make many weeks in a row profit. But if the market is like now, for example, last couple of days, we rather make like neutral or making like a small loss. And again, this is kind of the chips we put on the table to play, and this is part of it. So, and you see at the same time we have like a position with Tron. It's 3.6 million Tron, and this position is a long, and this position is $31,000 in a profit. And of course, for this position, we wanna like price goes more up, and Tron is pretty good as a trading pair because it's not so much correlated like the market. So if the market goes down, Tron goes not that strongly down. Then we have like here some longs which are not going so good yet, but if market recovers, like they will be in profit. And we catch today like this long with XMR with like $11,000 profit, and you see it's catching quite good. So if we make like another move up, it's already 11,000. We have a position of 500 XMR. So even if we recover the $50 to $100 loss, we make a couple tens of thousands of profit. Then we have a BNB. This can a bit ignored because we're holding BNB to reduce the fees, because that's like on Binance. And when we holding BNB, we at the same time opening a short that our position overall is neutral. So ignore this long story short. Then we have a Dogecoin long. It's also in a minus. And then we have like a free shorts, and all three are currently in a profit. The problem is now a bit with what we have here now is the market is kind of moving up and down, and we want to catch like more like a move which goes at least for a day, let's say 2 days or so. And so now the AVAX position, which is short, is in profit, but the stop loss or the take profit is quite far away because we just opened this position today, kind of here somewhere here on the top, and now we're trying to find the right time to close it. Then we have a sand position, which is it's also a short and HPAR position is also like in profit, and we hope, of course, that something is going. So what's going now to happen? So if the market stays flat, that's kind of the worst case. So if the market circles around some range, that's not so good for our strategies, but we kind of good in finding the right entries. And this is also a situation which we'll overcome with the next update. But nevertheless, so if the market now goes long, and keeps rising, all the long positions will be in profit, and the short positions will hopefully not lose all the profit. It's depending on the algorithm, right? Or if the market is going down, the short position catching the profit. So we want to have a strong move. So basically, what happens then? The algo is closing the positions, maybe with profit or with a loss. But overall, the best for us is like some movements, like this move. If this move, which is only for like a couple of hours, if this continues for like some days, it would be ideal. So like when we made a profit, it was kind of here we made a profit. This week you see it's like last this is just today, here we made a profit. But if you look into 4 hours, so here's where we make a profit, and here market gets choppy. It's a bit difficult, but we can catch some profit. Here we can make a profit. Markets gets choppy. We struggle a bit, but overall we're doing good for this month. And just to remember is that okay, there might be like some losing weeks. Overall, we're doing good. We are now already on a good way to reach the profits for this month. So if you see this kind of what I said initially, what I want to explain you. So every time here the equity curve is down, it's like we open trades, and this trade, some of the trades got closed in a negative, but for risk management purposes they need to be closed. And this is more like because the market is kind of not trending in any direction. So hopefully decline or crash will continue. That would be very good for us. Then we could even close this month with like a, let's say 15-20% profit. But we cannot know what the market will do, so we need to prepare for all cases. So basically we're working with statistics where we overall in any market will make profits, and we're taking into account that we have like sometimes drawdowns in order to pay for our opportunity cost. Good.
That's Mr. Sven, I have just one question. First of all, it's very, very interesting when you disclose that some of the positions you are shorting it and they are in huge profit, and you are in some of the positions you are already long. My question is, when the algorithm determined that the short it's not, let's say it will not continue this way, what inside of the algo is that you take the profit and you leave it with the position that they are long?
Yeah. So 1 second. I think I explained it last week also. I think it was on the call, but it's I think maybe a good chance to repeat it one more time. So let me go to my browser. Let's go to Trading View for more easy. So let's say we now open here long, right? So we open here long of Bitcoin, and then what we set is a stop loss. So we make a long, we want a price goes up, right? And if the price does not go up, we need to set us a border at which point we need to close our position to stop the loss. That's why this is called a stop loss. And of course, it can be also that we set like a price which is take profit, right? So if the price goes here to this border, we make a take profit. So now what's happening if the prices move? So the stop loss or the closing here price. So if the price now starts to move up, let's say price price goes till here, then the stop will move with the price. Yeah.
Okay.
If the price, but it will never move down. So it will move with the price, but it will keep some distance. So the price has still like some possibility to move and then make the next move. And if the price then continues to move, we move up the profits and we move up the stop. And like this, we kind of trying to close the positions. So now this is one of the biggest problem in trading or with our algorithms or like a topic. It's how far do we set this kind of stop order from our strategy. So initially we set it so far that we're not losing more than the risk we are willing to take per trade. So I said, for example, we will risk 0.1% of the portfolio. So if we have like $100, we move it in a distance that we only lose $1 for like if we go risk for 1%, or $0.1 if we go for 0.1% of our portfolio when it's go wrong. So, but then this stop has to follow the price and never go down. And here it's using a formula called ATR, average true range. So it's like not a formula, but it's like a coefficient. So this means we need to keep some distance in the price, because the price will go up, but it's not only go up, it's, for example, here it's going up, but it's going down again. And if our stop is too close, we're missing the profit, right? So let's say we make here an entry and we go and the price goes here, and then we're moving here, then the position will be closed, right? So that's why we need to statistically find the best way to follow the price, which will, in most of the trades, making the most of the profit. So we always need to look at all trades at the same time. And here we're using a value called ATR, average true range. And in short, this means as higher the volatility is in the last days. So let's say if the price moves, let's say $1,000 in average up and down per one day, then we keep around $1,000 distance. If it's the next day only the average true range go through the average going low and we at 800, then we keep 800. If the price moves up and the average true range is $1,000, then we move so close to the price that we only have $1,000 distance. So, and usually it's not much of a problem because this average true range is not so high. And if it's going in one direction, it's no problem. But what we have in, let's say, if we have like such spikes, like let's say if we go in another time frame, we see a bit of the issue sometimes we have. So now you see we moved in one day, we moved a lot. We moved like this morning, somehow during night, we was flat, yeah, and this morning we moved from 103,000 to 105,000, and now we crashed to 101,500. So this means the volatility is very high. So if we open a position, let's say now it's here, and so this position, it's we open a position and we also add like an order for protect our position. And if now the price moves up, this order is not moving that fast behind it because the average true range of today is very high. So it wants to give the price some room in order to find the right direction. And this is optimized on historic values. So it can be that, for example, today we have open position and we leave some part of the profit, right? So let's say, good example was this TRX position. It was earlier, as you see, it's like a long, and we already was open here. So we was already higher. So we left like kind of $10,000 of profit. right? So it was already $40,000 in profit, but it's not so close to the price to stop it, because it can now just make a small dip and continue. And we optimized the algorithm that overall all thousands and 10,000s of trades, we make this the best way possible. So if we're now looking into the order which we set, so here's like the orders. Let's search Tron, like sell order for Tron. TRX. So you see, this is a big position, 1.7 million. It's probably our. It's at last price. Trigger condition is 0.2756, right? So it's rather far from. This is, I think, entry, right? It's not the right. Wait. Sorry. Let me search the right one. Here. This is the right one, 3.6. The trigger position is for this closing this position as we have a long. It's a sell, so we need to short it, and we will close 3.6 million. And it's happened when the price hit 29. 2.9. So we're not so far away from the trigger position. If the price continues moving up, this trigger position step by step will move to the price, and depending on the volatility of the day. So at the moment it will not move so fast in order to not have too many stops. So again, so as you see, this is quite a complicated topic, right? Because you exactly understood. So we have now here some short. It's in profit, and we have here some long, which is in profit. And overall, market usually goes in the same direction with crypto, right? So you see, like if you look into Tron, you see, like let's go in smaller time frame, then it's more visible. You see, market went down and trying to recover now, and same with AVEX. It's looked pretty similar. Market went down and tried to recover. So now it's the problem. Okay, what we do? So this is kind of the most complicated topic, because if we now starting to take too much profit, then we will win on this trade, but in other trades we will lose, right? So you need to find the right condition to move the stop more close without losing that much. But in general, it can be also that we have positions which go not with the whole market. A good example is XMR, right? So XMR actually started to recover. See, like when the whole market went down, it went up. So and we catch that well. But in order to answer your question, so what we use to close the position is so-called trailing stop. Stop what we move behind the position. And here's some formula which works. And this is not perfect, but what we working here is basically we testing here also different formulas, and that might improve results. But what we looking here is more like, how can we avoid more stops in markets where we go into one trend or something like that? And I mean, that's pretty much the answer to your question. I hope it was understandable.
It was understandable. What I can say is, Sven, thank you very much for diving deep into the entire trading. Thank you very much for sharing the platform. Once again, there is also a lot of question if the trading is happening. Ladies and gentlemen, it is happening, and based on the definition and explanation of Mr. Sven, I'm sure that we will start to enjoy even more profits in the near future, and definitely in 2026. Sven, once again, thank you very much for joining this call, and I hope to see you also next week.
Of course, thank you very much. Thank you for listening. Have a good week. Bye-bye.
My dear community, Sven, thank you very much. My dear community, thank you very much for joining this call. Next week, probably I'm going to be already in Japan. Konnichiwa. The markets are waiting for the latest news and updates, and I'm sure that everyone will hear all the amazing news, what we have prepared for our entire ecosystem. My dear community, thank you very much, and see you next week on all the calls. Good night from Europe.